Yeah, I'm seeing a lot of people join, so I don't want to keep people waiting. So I think we can go ahead and get started, Mike.
We're live right now.
Yeah.
That's awesome. Okay, great. That works. I thought Lou was going to make the introduction, but we might as well. Guys, I appreciate you joining us this morning, 9 a.m. where I am in Arizona. Other Mike out east in the Poconos. And so let's take a quick minute to introduce ourselves and we'll get right into it. But we wanted to take this opportunity to teach you guys from a beginner level as well as an expert level how to get into a short-term rental investment property from scratch. I imagine the range of investor experience on this call will be varied based on even the calls that I get through Savvy from investors who are interested. You get very base level questions and you get much more technical questions. We hope to cover as much of that as possible today. But Mike, if you'd like to introduce yourself and say what brings you to this call this morning.
Yeah, so I'm a short-term rental agent and investor. I'm based in the Poconos of Pennsylvania, which is strategically located close to both New York City as well as Philadelphia. And I've been with Savvy for a while now. Company's growing super quickly. So I actually joined in May, and we also have our own short-term rentals here in the Poconos. My family does that we started investing in 2020. And so we have about four short-term rentals here in the market now. So we've seen the market progress, and we're operators ourselves, so we always use that data and try to learn as much as we can, and then pass that on to potential investors and help them make the best possible decision.
I think that's so important, and we can get into this a little more today as well. But the fact that you have that experience, that's what makes Savvy different. That's what makes Savvy special, is that all of our realtors have experience with short-term rentals outside of just being realtors. And that's giving you the context to help people make good judgments and understand what kind of pain they could be in if they made a mistake, what to avoid, and then how they can create a successful and lucrative financial opportunity. So that's awesome. I'll introduce myself as well. My name is Mike Stone. I'm out here in Arizona. I represent Phoenix and Scottsdale as well as Sedona. I could do anything in Arizona, but those two markets, or those, I say two markets because Northern Arizona is like Sedona, Flagstaff, all the like up near the Grand Canyon is another city called Williams. And that's kind of one big market in my mind of, those properties perform similarly and you look for similar amenities and things like that versus Phoenix and Scottsdale, which are adjacent to each other in the middle of the state, as well as Paradise Valley, a very upscale, I guess it's a city, not a neighborhood, but between Phoenix and Scottsdale as well. And that's where you could find some of the most lucrative opportunities that exist in Arizona. What's interesting about my market is that it is super saturated. So people get scared of Arizona because it's one of the most saturated markets in the country, but the demand is still really high as well. So if you find the right property and you make it perform well through the right type of amenities, design, build out, that's where you can still find some of the best deals. And that's why I'm still having a great time helping people shop out here. Like I said, out here in Scottsdale as well as Northern Arizona, it's been great.
Nice. I wish I was in Arizona right now. It's like 20 degrees here in the Poconos. But and one other thing I would say just on in terms of the agenda here is we'll kind of walk step by step. Just like the way I kind of see it is if you are thinking about buying a short-term rental, like literally, what do we need to do? We need to get the money together. We need to get prepared if we're going to have a team, step by step. So that's what we'll cover today. And one other thing I would ask for you guys to do is there's a chat in the Zoom here. So if you have any questions as we're going through stuff, just feel free to drop a note or drop a question in there, and we can make it as interactive as possible as we go through.
I was going to say the same thing. I would enjoy that if you guys do want to jump into the chat with anything, even just comments. If you want to share a win, like whatever's going on that's relevant to you guys, it'll be fun. So feel free to engage. And I think we just got one already, unless that's a test. Oh, it says chat is disabled. Trish, I know you are on this. If you could help me figure that out, I don't know the right button to make that not a thing. But thank you, MJ, for letting us know. Also, there is a Q&A box, which is how MJ got in touch with us this time. You could use that as well. So if the chat itself is not working for any reason, feel free to comment or ask questions in that Q&A, and we'll go through them in order. Sweet. Thank you, guys.
All right. We won't spend a lot of time on this, but we introduced ourselves. But just like Mike is in Arizona, I'm here in the Poconos in Pennsylvania. Savvy has a network of the best short-term rental agents and a bunch of different markets, and we're always adding new markets all the time. So get in touch, and if you don't see your market, get in touch, and we might be in that market very soon.
Yeah, and the thing is, we also are so well networked. Tyler is obviously, relatively famous in the short-term rental industry, but Mike and I each have our own networks too, as does any face on this slide right here. So if you do reach out to us about a market that we don't have covered in the Savvy ecosystem, we can certainly recommend somebody who is qualified, who understands short-term rental investment properties, or someone that's coachable that we could help through the process in another market. And if we start getting requests for, a lot of investment and a lot of investors in a particular market, we could certainly intentionally look to open that up. Trish is on a warpath to expand Savvy nationwide and cover the entire map until there's so many pins in the map you can't even see the map. And I would love for that to be a thing. So please let us know where you guys are interested in investing. And that's one thing we could talk about today, is how to find your market as well.
Cool. All right, well, let's get into the meat of the presentation here. And I'm just gonna kind of kick it off and ask you a question, Mike.
Sure.
But because again, it's like, the first question I guess is like, should I even be doing this, right? So, and everybody has a different story or different motivation. So I'm curious how did you get into short-term rentals? Like, what was your journey, or why did you start to, get interested in it?
Sure. Yeah. So it was a little over 4 years ago now that I was an attorney, and I did not enjoy anything about my job. I was actually very good at it, but I hated being an attorney. So I was looking for different ways out. And I remember studying the stock market and learning about investing, and then learning about real estate generally. At which point, the first interaction I ever had with this industry was an ad on my Instagram for an Airbnb coach, someone who I won't name because I didn't end up recommending him. I've had many better coaches after that. But the idea was sparked. And so I started learning about short-term rentals and seeing how this is on all fours with everything I'd been learning about real estate investing, with a lower barrier to entry. And I said, I could start this business right now. And so it took me 6 weeks from the time that I got that idea to put in my 2 weeks notice and quit my job. Went all in on I bet every dollar I had on that business, and started my arbitrage and then co-hosting short-term rental management company here in Arizona. I've been doing it Phoenix, Scottsdale, Paradise Valley, homes from studios to 6, 8 bedroom homes. Just been all over the range for the past couple of years, and now focusing much more on the luxury space. In particular, that's a market-based thing, but it's also an ROE-based thing, return on energy. You do the same amount of work for lower quality properties you do for higher quality property. So I'm focused more on the luxury space now. And it's been so much fun. I love it. What I love about short-term rentals and the investment strategy as a whole is that you have so much control of the outcome. With stocks, you put your money in the market, and you're kind of hoping, waiting, predicting. But with short-term rentals, you get to control the outcome with forced appreciation, a high-end design, high-end amenities. It gives your guests such a cool experience. And then by creating that intangible value, that's what will increase your returns as a matter of cash flow, not to mention the property is going to be appreciating. And especially some of the higher level investors have great tax strategies that they can leverage to save a ton of money at the end of the year. So I think short-term rentals is a brilliant investment strategy that beginners and entry-level investors can understand, get into, and then leverage that skill set to develop more skills in real estate and grow from there.
Nice. Yeah, I think I'll just pick up on something you said there, just to riff off of it a little bit. I mean, I think short-term rentals really are like they really one of the things I say about short-term rental investors are like the hardest working people, because it's not a free lunch by any means. You're really kind of trading, there's always a trade-off between time and money, but that actually provides a lot of flexibility, like you said. So it makes it more accessible, not only more control, you get more control over the outcome, as you said, but it also makes it more flexible depending on where you kind of are in your life journey. So if you maybe have less money but have more time, you can, spend more time and improve the property and get your revenue up and make the numbers work that way. So I really, and then also, if you're looking at other businesses that you could start, the fact that financing is so available, is another thing that, that makes it really accessible. So I love it as an investment strategy because of how accessible it is. And ultimately, I think, anybody really can be successful in short-term rentals. It takes a
Yeah.
lot of work, and it also takes a lot of preparation, which is, the point of this of this presentation. But I really do think it's accessible to anybody who's motivated and wants to do it. So
I couldn't agree more. When did you start? What got you into your short-term rental portfolio?
I'm gonna date myself here, but I actually started hosting Airbnb, I guess. Like I was in San Francisco. So really when Airbnb just kind of started kicking off, and I we put up a room in one of our apartments when one of our roommates left, and it did, phenomenally well. I was like shocked and amazed because it seemed crazy to me. And it was a little crazy because we had like, some guy that we didn't know that was kind of a roommate for a month or two, but it really worked. And I think that's always such a powerful feedback loop. When you do, anybody that wants to be an entrepreneur or have their own business, and when you're successful and it makes money, I think that's just such a powerful feedback loop. And so that's kind of what got me excited about it initially. And I actually went on to work at a short-term rental company that was venture backed, called One Fine Stay, and in New York City, and that was interesting because that's probably not the best market for short-term rentals, and so I kind of learned how regulations can, work against you in that way. But I learned a tremendous amount, and ultimately thought I was kind of done with short-term rentals. But then the pandemic happened, and like a lot of people in New York City, we were looking for reasons to get out of the city, and found the Poconos and bought a property, and
Mm.
it's done tremendously well. So I think the big takeaway for me there was it revealed that not only can you make money in real estate or in short-term rentals, but how it's been such a powerful impact to just allowing our family, it's actually created a lot of wealth and created a lot of new opportunities, and that wealth is now a means to an end for, what we want to do for the rest of our life. So it took on a completely new meaning for me over the past couple of years.
That's beautiful, Mike. And that's so funny because that really is the Airbnb American dream, starting with the roommate on the floor and now the portfolio and the Poconos. But you mentioned something that's actually a terrific segue into our next conversation piece, which is choosing a market. When COVID happened and everyone was leaving the city, you saw an opportunity in the Poconos. I'm curious how you figured out that that was your opportunity, if it was more COVID led or if you already had a relationship to the Poconos. And then let's kind of talk about from square one when investors deciding, hey, where do I go? I know many investors even call Savvy and they'll talk to multiple ones of us. I spoke to somebody who spoke to you the other day. He's looking for some reason in the Poconos and the desert. Why? I don't know, but this man is interested in both. And that happens quite a bit. So picking a market, I think, is going to be a fun and critical step that we can elaborate on. But yeah, tell me about your entry into the Poconos and that mayhem window of post-COVID. People didn't even really want to be in short-term rentals on the hosting side anymore. And meantime, you're like, no, let's go all in. Here's Pennsylvania.
Well, I mean, that's an interesting point too, because I wasn't, coming from New York City, I wasn't even really thinking about the Poconos as a market. And to be honest, it really did a lot better than I ever would have expected, which kind of goes to show that you need to be a little bit open-minded, and you kind of need to look, and it's good to look in more than one market because each market has different kind of dynamics, or said another way, each investor might be at a different point in their life cycle, but each market might be at a different point in their life cycle too.
Right.
And so matching those things up is really interesting. So yeah, so I think I was kind of surprised by it, but I think the one thing that we liked about the Poconos was obviously that it was close. So I think that allowed us, a little bit more control, which is, I think, a common denominator for a lot of people. We actually didn't know a lot about the Poconos when we started, which I think is always helpful. But if you have a strong enough market, you think you can, pick that up pretty quickly. And yeah, so I think it's there's kind of different trade-offs. And one of the other things I think is helpful is there's always a trade-off between focus and being open-minded, because it's helpful to look at a couple different markets. That way you're seeing different opportunities and you can kind of compare them. And ultimately it gives you a higher probability of actually being able to find a deal. But you also don't want to look at, you kind of need some level of focus so that you're comfortable with the market. But yeah, so I don't think there's a one size fits all strategy to choosing a market. But how did what are your thoughts? How do you tell clients about your market or other markets?
So I like how you said that because a couple things I noticed about how you said that. One was it's true that you could have success in any market. If you find the right deal in any market, if you want that market because that market's important to you, it's close to home, whatever it is, you can find success. You just have to know what that market delivers and how to invest intelligently. And that's where having a short-term rental host, realtor, manager, somebody in the area who's an expert would be absolutely critical. And that also, you mentioned like you liked that the Poconos was close. That's a conversation I have with investors all the time. And people fall on both sides of the fence. Some people really like the idea of being hands-on. I find this to be more true with beginners. And I was not comfortable going out of state. I mean, granted, I was doing arbitrage and co-hosting to start where I was responsible for other people's properties. I wanted to be there. I wanted to learn. I wanted to be hands-on. I wanted to understand things about why the plumbing is broken that I didn't know about plumbing before in case it ever happened again with another property. So it was important to me to be close so that I could be hands-on and so that I can get the full learning experience. Someone who's more, let's say, passive, or at least experienced and is comfortable going out of state, they would probably be wise to consider what having a manager would look like, someone boots on the ground there, and then factor that into your financials. So that's important. Can you afford to go out of state? And then if you really don't want to be involved, whether or not you have a manager and you just have your operations really dialed in, if you have that kind of experience with short-term rentals, you can be comfortably out of state, knowing that things aren't going to go mayhem because you have really clean operations. Right now, managing the whole portfolio is like 2 to 4 hours a week for me, and nothing really goes wrong anymore. You get the occasional needy guest, the occasional whatever, maintenance thing, but it's all seamless. And having that seamless operation, because I got experience in my own backyard, now I would feel perfectly comfortable going out of state and know exactly what needs to be done, know exactly what could go wrong and how to prevent it in advance. So having that kind of either the leveraging somebody who's local who does have that experience or creating it for yourself allows you to have a wider reach. But like I started saying at the beginning, the fact that you could have success in any market, I think that's important. What you were saying about focus is, look at 2 or 3 if you want. But if you're feeling inclined to go to a market, then maybe just spend more time mastering that market than searching for 4 and 5 and 6. And I have had people who are looking in all 50 states call me and they're like, I just have no idea where I want to go. Like, that's just an unnecessary question to solve for. Just pick a couple. Where do you have family? Where would you like to visit? And if you get the opportunity for personal use, which is another perk of short-term rentals as opposed to any other investment property, almost, is your personal use. So where do you want to go? So I think the most important things to choose in the market is that if you have a desire for a specific market, go for it. If you are not sure, then pick 2 or 3 is perfect and kind of get a feel and then go deeper. If at the end of that research, you don't like any of those 2 or 3 for a specific reason, you'll at least be educated enough to know when to shift. And then the last thing is just factor in, do you have expertise? Do you need to acquire expertise, or do you need to hire expertise? I think those are the most important things for choosing a market.
Yeah, just one thing I'll add on that too. I mean, because not everybody's even close to a good market where they should invest in. So there are constraints there. And I think things are kind of on a spectrum between if like you can let the market do a little bit of work, kind of like, you're investing in the stock market, right? If you find a good market and you have a good team, or you can kind of do a little bit of the work, right? But if you're not going to be hands-on, then it almost kind of doesn't really matter. And I think one thing maybe people do is that they kind of get psychological benefit of like, I want to be close to the market, but actually if there's a much better deal in a different market, you should also, be open to that and just, you have to find the right team to help you. But be open-minded, I think, when you're looking at the numbers and looking at markets.
Absolutely. And now on that note, getting into the numbers, when you're trying to analyze these deals, I think it's also important to understand what a market is going to deliver. For example, if you follow Savvy's daily deals in those emails, you guys will routinely receive some of the best deals that we could all find on the market. These are some experts in every state looking for the best opportunities that exist. And then we put them in an email, real concise and easy for you guys to digest, see if you're interested and follow up. Those deals, if they are in, let's say, whatever, if there are many markets where 15% gross ROI is completely normal, it's attainable, at which point you're even thinking, well, I should probably go for 20 because if I look a little harder, I might be able to get an even better deal. There are also markets like Scottsdale and Sedona, where I operate, that 15 is nearly impossible to find. When we do, I have my VIP ready to transact, urgently seeking to buy kind of list of clients and investors, and I send them out the best. I found one was 20% the other day. I found one was 15% the other day. That doesn't happen every day. A lot of the time we're finding, 10, 11, 12% gross ROI and forced to do a substantial value add play, which is fine too, forcing some appreciation and getting money back that way. That's great. But it's just what you have the appetite for. And so in Scottsdale and Sedona, where 10 is normal, 15 is a small miracle. You just have to know what to expect. But the investors who are looking to pick up properties at 15% in Scottsdale and Sedona aren't worried about the 20% that they might be able to find in, let's say Denver because it existed, because they want to be in Scottsdale for some reason. So having a base level idea of what kind of returns you should expect is important, and then overlay that with any individual investor preferences. If an investor I'm dealing with knows how to get 40% returns in another opportunity that's, relatively not passive, well, then I'm trying to convince them or educate them why this 20% return with a manager is passive and better and more fun, not to mention the tax benefits and the forced appreciation. You have to know what is actually going to give them the best opportunity for themselves, because if that 40% they could get is passive, and I do know investors like that, then maybe this isn't the best opportunity. Maybe this isn't the market. Maybe this isn't the deal. So you have to know what the investor actually wants. More commonly, the investors I'm dealing with now are looking for either 20% cash on cash or 15% gross ROI. Understanding what that means and how to find it, I think, is one of the most important things you could do at this stage of looking for a property. What kind of metrics do your investors ask you about at this stage, when you're just kind of, you picked the Poconos at this point, but you don't really know which house, what bedroom count, what kind of amenities do we need, what level of luxury, what kind of things are you thinking about at this point with your clients?
Yeah, so that's a great question. I think it's one of the most important questions. So I think it's kind of, ties into like what the buy box is for a given investor. And the way that I like to think about the buy box is like you need to be focused, right? Because if you're just kind of constantly looking at deals with no goal or no definition or no vision of what a good deal looks like for you or what you really is important to you, then it makes it difficult, right? Like if you're going to buy a primary residence, first question is like, what's my budget, right? And I think with an investment, there's other things. Budget is still a criteria, and how much cash you have to invest, and then what's going to be required to be successful in that market is another criteria. But I think it's like you need to define what success looks like for you, and so normally one of the questions I ask is like, what's your revenue threshold? Because some people don't want to manage like 10 small homes. They want to manage like a handful of like bigger properties. And then that makes things really easy because I can look at a property and say, this property, if you want to generate $100,000, this property will never work, right? Or if you want to generate $200,000 in property, these are the only two properties on the market that actually have that potential. And here's what you need to do to achieve that. So I think I actually try not to answer that question for people, but I think but certainly you need to you want the home's got a cash flow, and when we say cash flow, like normally we're not talking about being break even, because that doesn't leave a lot of margin for error in case something were to change. So I think like most people are kind of looking for that at least 10, 8%. If you're going to use a property manager, maybe it's going to be a little lower, but at least, 8 to 10% cash on cash, if not more, if you're, a hardcore investor, because if you've got, if you've got a lot of flexibility, if you've got a lot of skill, or if you've got a lot of cash to invest in the amenities and things like that, there's certainly deals out here where you can generate, 18, 20, 22, sometimes even 25% revenue to purchase price, which is
Mhm.
obviously bring your cash on cash, probably in the 25% plus. But it really differs for every investor. And yeah, I think, if you're looking, I always think about things as kind of like the baseline. Somebody asked me the other day, the baseline for me is kind of like 18% revenue to purchase price. And I'm kind of including cleaning fees in that.
Mhm.
But obviously the property that you're looking at is gonna depend on that. So if it's a lakefront, that's a more valuable property. It's going to be a little lower because it's going to trade at a premium. If it's turnkey, maybe you don't have to do a lot of work. That's going to trade at a premium. And then if you're going to go in and you're going to add a pickleball court and a pool and get a professional designer and do 5,000 square feet, well, then you're, then you can probably get to that 22%, maybe even 25%, depending on how good everything comes together. So yeah, so I think it really depends on the investor, but what's most important is figuring out what success looks like for you.
I love that. I think that's exactly what it is. I like to say clear mental picture of what's a win. What is a win? If I find it for you, I need to know that this is what's going to make you happy. So I spend a lot of time with each of my clients on the buy box so that I'm clear. What I found interestingly is that not everybody knows. Not everybody knows exactly what they want, and that's perfect. That's why you come to Savvy, so we can educate you and walk through that with you. If you don't know what a good ROI is, or you don't know what it means and the difference between cash on cash and gross ROI, then that's what we're here for. We could explain it for you in a way that's very clear so you know exactly when you're getting your money back, at what speed, and if it's worth going down this particular path to this deal or a different style of deal. And then when we have that clear mental picture of a win, then it's like Mike was saying, we got to know what you want in money. We got to know what you want in time invested into dealing with this property. And we got to know what your strategy is. Do you want to build? Do you want to value add? Do you want turnkey? And what's interesting too, I had that conversation recently with a client who's looking for, he didn't know what he wanted purchase price wise. He just knew that he had $200,000 to $250,000 to invest. So we had to math it back and figure out, okay, well, if this is your down payment and this is your loan terms, and this is what amenities you'd be able to afford. And at that purchase price, so if you get a house that's as much as you can afford with the 200, 250, you're not going to be able to be competitive on an amenity basis in the guest experience. So your cash on cash returns may actually be less because you'll be in a brutally competitive threshold without much to offer. So instead, if we back that purchase price down, maybe 100,000 or so, and we did, then now you have a lot more room to invest into amenities, which changes the cash on cash calculations. But at least then on the back end, when we're done, you're going to have a highly competitive property in a tier that's something you've now dominated, as opposed to being the bottom of a different tier. And so having somebody to coach you through that will be very helpful. And that's the best thing, that one of the best things that Savvy delivers.
So I'm just going to take a quick, I'm going to just address, there's a couple questions there. One was about, somebody wants to know the best way to connect. So with you, Mike, in Arizona. So that's Eddie. So we'll
Eddie.
have that at the end of the presentation, but you can also address it now if you want.
Sure. Yeah. Just real quick. Yeah. We'll have a QR code so you could get to me. My email is mikestone@savvy.realty. If you want to just email me right there, and you can follow me on Instagram @MikeStoneGroup. And in either case, I'm very responsive. So just let me know where you're at. One thing I'll ask, if anyone is going to reach out to me, the more information you give me up front, the better. Sometimes I get texts that are very uninformative, and I'm like asking all the same questions. Tell me what you want. I'm happy to help. Let me know your situation. Let me know what you're looking for. Are you selling, buying, unsure? Do you need education? Whatever it is, I'm happy to be useful for you.
So then, and then we had another question from Steve. So he's asking, he's a remote host. He's 4 months in. He has three properties. That's
Nice.
wow, that's a lot in 4 months. And he's
Yeah.
asking about like occupancy during slow season. So how do you kind of approach that?
Great question. So I would love to know what market you're in, because that also affects things. For me in Arizona, our slow season is the summer. It's 100, 110 degrees in Phoenix, and it's absolutely brutal. What I like to do is I got really invested into midterm rentals as well. And I use that as a hybrid strategy with my short-term rentals to offset the slow season. So the way it works with that is, obviously you get the volatile busy season and then slow season, but with midterm rentals, in the insurance space that I work in, if there's a fire, a flood, or a substantial remodel of some home, the family calls their insurance company, who reaches out to a middleman who calls me to be the housing supplier. And their prices, I still charge them the upcharge in busy season. I say, hey, this is a short-term rental. This is what we actually charge. This is what we warrant. It's the market rate. And they pay it. In the slow season, I say, hey, this is a standard rate of a long-term rental. Even though we're having a tough time in short-term rentals, I literally could still go list this property and make an average price. So instead of having a busy season and a slow season, I have a busy season and a longer average season. So that is its own niche strategy in and of itself, midterm rentals. And I can help people, if anyone's interested, reach out to me at the same email or Instagram. I could coach you up a little bit more on midterm rentals as well, but I think that's huge. I found that to be very useful for my summertime, or most people's wintertime. Other things you could do, honestly, is have a seasonal refresh. And this is not easy for everybody to do. Sometimes it's expensive, and especially if you're a co-host, it's tough to sometimes convince your owners to do it. But if you could prove out the ROI, then it makes sense. What I mean is $750 for photos. You can have summer photos and winter photos. Winter photos, maybe you have more of a fire pit kind of emphasis, and maybe summer it's more of a indoor emphasis if you're in a cold market. Here in the desert, I'd be showing the outdoor amenities more so in the winter, saying, hey, we got golf, we got, the pool, we got all these reasons to be outside. Whereas in summer, it's maybe more about the indoor attractions. So you can switch it up that way. Besides that, I think it's just an effort thing. If you're changing your pictures and you're changing your titles, and you're changing your descriptions, you're optimizing every day, and you have your finger on the pulse with the pricing, and you're obsessed with price labs, and every weekend what's going well, what's not going well, figure out your rule set configurations in detail, and you consult with experts. Just touching it and being active on Airbnb's platform and on Price Labs will tickle that algorithm to push you higher in search. And then you'll start correcting yourself. Okay, well, this cover photo, as soon as I changed it, I got 3 bookings. Maybe I'll leave that and start shifting some of the other things around. And it's an art, not a science, but being invested in the outcome by just obsessing over it will help. And you'll start to figure out more patterns that work for your listing. Last thing I'll say too is just check your competitors, see what works for them. If you're feeling like you're slow, somebody's booking somewhere. It's probably not, maybe it's a slow season and, maybe market slow down, but don't let those outside of your control things be your excuse. Look at your competitors. Do they have a hot tub and you don't? Maybe that 10K is an expensive hot tub, or it feels like it, but if you make an extra 15K on the year because of it, or across 2 years because of it, and it pays for itself, it may be worth it. So those are things to consider when you're feeling a little tense.
Cool. Yeah, we have another question here about amenities, and they're asking about standalone amenities versus amenities in like an HOA that are communal. And so condos and, there's HOAs like this and lots of different markets like the Poconos, and they say they're looking in the Smokies, Poconos, Shenandoah, and Myrtle Beach. I'll answer this one in the context of the Poconos. And then I think that, but it's kind of similar for probably some of these. I always try to, and Bill Faith has a thing about like, I don't know, he's got like 7 or 8 points about how he analyzes, short-term rentals. And this is one of the cool things about short-term rentals is each little variable, you can really get in the weeds and think about it and can make a big difference. So I kind of think about communal amenities versus private amenities the same way. Obviously, a private amenity is going to be more valuable than a community amenity. That just goes without saying. With that said, I think you can also think about your customer and who's going to be, your target avatar and what they're going to be looking for. Because it's, if it's a 3-bedroom cottage or something like that, it may not be feasible, or it may not even make sense to like put in an in-ground pool. Sometimes it does, by the way, but you can also, but it may not work for your budget. One of the things I like to think about in communal amenities is that you're kind of, if you're buying in that community or that condo, you're kind of getting it for free. So one of the things I always try to do to get more value out of it is like, for example, in the Poconos, we have a bunch of lakes. So if you can be walking distance to a lake, that's a benefit. You can also do your drone photo and then have the lake in the background so the home looks like it, you're actually sharing that so people know that it's really close. Also, things like communal pools, same deal, right? You can actually put that in the listing description about it's 4 minutes away from the pool. And you can even have like a little map as, all the different amenities, and really some of the communities have just amazing amenities, and I don't think people even do a great job at marketing them. So I think that's definitely, you should be thinking about it when you're making the acquisition. Am I going to be doing communal amenities or am I going to be doing private amenities? And depending on what that is, you should be thinking about how to market that and really how to, add value for that, for your potential guest. But yeah, I think private amenities are definitely more valuable. And I think especially like with bigger homes, I think people are really looking for that. And if you're going to split the group, if you're going to split the booking between, 10 people, you probably have the budget to kind of pay up a lot more for a private amenity. And so I think in general, I think they're pretty good. Whereas, you can imagine, right? If you're a group of 12 or 14 people and this is a high stakes trip, like schlepping down to the private pool isn't probably going to be as great of an experience as having that in your backyard. And summertime comes, people are going to pay a huge premium for that. But you can make it work both ways. I think it's always thinking about how are you gonna deliver outsized value for that specific amenity and for your customer.
That's awesome. And one tiny little thing that was in there that I don't want people to miss is you mentioned the word drone. Guys, drone shots are killer. I see it so underutilized, and it works so well when you do, when you can show them the layout. And imagine that in a community, whether it's a condo association or some sort of, building structure that they would have no idea what the floor plan is. To let them know, hey, you're only a 2.5 minute walk to the community amenities or less is valuable. Give them a lay of the land. And then I also feel strongly about that with homes. Show them what is the backyard from an above ground view, and you could walk around that way, or show them how they would walk around that way to give them that full experience. It was such a small thing. You said a lot of good stuff in there, but I didn't want people to lose that. The drone shots are actually super, super valuable. I have
All
some.
right,
Oh,
Mike, we got one more question here. So the Taiwanese semiconductor company is opening in Phoenix. Do you
yeah.
think short-term rental or midterm rental around that, complex is going to be a good idea?
I'll
And,
tell
and
you.
this is from Natalie, she said there's also a lot of HOAs around there, so I guess she doesn't like that.
Yeah, I also hate HOAs. There's a painful amount of HOAs around here, but it is what it is. It's worse in Sedona than Scottsdale, but phenomenal idea. Phenomenal, phenomenal, phenomenal idea to invest there right now. Sooner the better because you want to capitalize on this run while everyone's coming in, moving, getting situated. Midterm rentals are flying over there. I am so keen on that area right now. I'm working with a guy I mean, he's a mega millionaire investor doing all kinds of crazy stuff, but he wants to buy either a series of midterm rentals or a hotel around there for that purpose. He also does AI and robotics, so he's particularly inclined to be right next to this Taiwanese semiconductor plant. But anybody is, even if you're not an AI guy. It's still a fantastic real estate play right now, and I think its price point is not luxurious because you're going to be hosting the workers mostly, and you're going to want to be in a very traditional commoditized Airbnb that truthfully is the exact type of Airbnb I would not recommend in any other context. If you're near that plant, it's going to be excellent. If you're anywhere else in Scottsdale, I wouldn't say, hey, just pick up a standard 3-2 in certain parts of town. There's parts that's still fine, but like certain parts of town where it's just been so slammed with 3-2s, the fact that you have a pool is no longer interesting because so do the other 1,000. It's just, it's that generic kind of listing doesn't fly in Scottsdale anymore. It just doesn't. You have to be luxurious. You have to deliver exceptional experience with unique amenities. But for the Taiwanese semiconductor, it's people who are just coming to work. They're not looking for bells and whistles. They're looking for, blue collar-ish families, a couple managers and supervisors as well, who are just there to work. Then you get the engineers, they can afford a little bit more. But you're going to be looking in that standardized range. And that is where I love to run the hybrid strategy. What I mean when I say that is I go midterm rental heavy all year round, even in short-term rental peak season. Because if you remember, I say I still charge the MTR insurance companies the same prices I would make on the short-term rental market, but no turnovers, no mayhem, no complaints, no reviews. I just set it and forget it. Sometimes I have to teach them how to use the thermostat when they move in, but then they're quiet for a month to 3 months, up to 9 months. It's the best. So I always lead MTR heavy and I'm priced accordingly. And I use a calendar strategy that's like that. I could discuss that on another video one day. And then I would fill gaps with short-term rentals, but with complete confidence that if I were vacant as an MTR, my STR is still cranking anyway. So that's my favorite play, and that play works really, really well in that area. So Natalie, if you want to look at properties in that area, I'm happy to show you what I know of that area. I'm intimately familiar with Phoenix and that part of town, and and even I know a lot about that price point too. It's not my favorite. If you had the capital to go higher, I would say find a different part of town and a different strategy, and play the luxury game in Scottsdale. That's what we're known for. But if you're looking for more of a standard price point, then that's a great, great area. So hit me up. Let me know if I could help.
All right, so we got one more question here. So they're talking about can you talk about getting the team in place in a market? And so he's saying this is a huge barrier to entry to enter a new market because like obviously you're going to need a designer, a cleaner, handy people, et cetera, et cetera. And without it, kind of like you can't really invest in the market. And I think I'll touch on that, but I'd like to hear what you
Yeah,
say about that, Mike.
sure.
But yeah, I think that is true. With short-term rentals, this is one of the things that always amazes me that if you have you need the team and you need the right ingredients. And then if you have it, then like we said before, it's accessible for anybody. Anybody can be successful. But if you don't have it, like you're just sitting on the sidelines. And I'm,
Yep.
that's what I think is so cool about Savvy opening up in new markets is because that's what we
Yeah.
try to do is really create that opportunity for people in each market. And so I think number one is that you should be talking to an agent that's going to help you with those things. There's, there's in any large vacation market, there should be good designers and there should be contractors. And I think, and there's also with on the designer piece, there's also national designers and ways to do that as well. And there's property managers and I think the property managers in each market are increasingly kind of realizing that they need to help, facilitate those sorts of things with the designer or with the contractor. And so the agent or the property manager, all these people are important resources to get into the market. Obviously, having a good contractor is like, that's make it or break it too, because if you don't have trust in that contractor, then, things can go terribly wrong. So I think, again, looking to people who have experience, either another investor or your agent or a property manager, are really probably the best resources. Facebook groups are also, that's one of the beauties of I think the short-term rental community is that we're all growing together and so we're helping. So I think you kind of have to exercise a lot of different resources to put these teams together. And then so yeah, I think one of the ones I always struggle with is handyman just because and this is like if you're going to do self-management and cleaners too. I think those are kind of the two hardest ones because handy person never wants that odd, like the odd job is just that it's odd.
Right.
But I'm curious to get your take. How do you kind of counsel people to put the team in place?
So I love how you said that. And so I won't overemphasize it again, but I do want to reiterate just, yeah, referrals. Facebook groups is good because you get some, community feedback as well. But if you got someone who's boots on the ground to give you a referral, especially if it's a savvy agent, like literally savvy, that they know STR, they know the teams, they could probably give you a specific referral. But you got to get referrals because it is difficult. I mean, I went through, so I'll go in order from cleaners, maintenance, and then design, let's say. Cleaners, I went through 13 cleaners before I found my current team. I am ruthless with cleaners. My 5 stars are my 5 stars. Somebody else being lazy is not going to be the reason that my business does poorly. So I was ruthless, 13 in a couple of years. And then now I've found someone who's been with me for a long time. She is amazing. She's got a small team, which okay, let me go one step even deeper. With the cleaners, you can go individual, you can go corporatized, or you can go in the middle. And I recommend the middle, Goldilocks. The ones who are individuals, they may have just other clients and other obligations. They get sick. They have a daughter's got an emergency. It's just high risk to have dependence on one person in particular. So I like them to have a little bit of a team. My girl now has a team. Her husband works, her son works, and a few of her other employees are just friends that she's trained. And they've all gotten me immaculate 5-star reviews literally every single time. I'm so happy. Once you have that, especially if I now know she could scale, if you're investing here, I say, hey, here's my girl. I got to make sure she could scale first because she's too important to me. But once I know that she can handle you and me and not drop the ball on my properties, you now have the best cleaner in town as well. So I think that's huge with the cleaners. And I would recommend using Turno. It used to be called Turnover B&B. Turno.com is the website that I've used to hire, fire, schedule, and pay my cleaners almost it was like the first 2 years until I found this girl. Now we're vibing and everything's perfect. So we just go direct. But I found her on Turno, I think. Yeah. And I found everybody before that on Turno. It's nice because as much as I had to fire a bunch of people, they all started out good. They got hired. They did well for a little while, and then someone drops the ball or whatever it is. Turno gives you reviews of their performance. So I would go review them, and I'm not usually mean, but like if somebody did poorly and they just left me hanging in a really bad way, I would go, yeah, 4-star, didn't work out great. And so have a bunch of other hosts. And like I said, I'm not usually going to leave a bad review, not a restaurant, not a bad guest. Like that's not my MO. But this is critical for our operations. This is our boots on the ground. It's the face that the guest sees when they get here. So having that high standard for cleaner is critical. For a handyman, I agree. That's also super difficult. And again, it comes down to the performance of the contractor, just like with cleaning. If they're just lazy, if they just don't show up, if they tell you, hey, I'll be there before check-in, and then they show up at 5 when the guest is already there eating dinner and they already found the problem they were going to solve, then that's not a reliable handyman. They need to know how to do it the Airbnb way. To solve for that, I use Thumbtack. There's other similar apps as well. Jackrabbit I've heard of, but Thumbtack is an app where you go in, you bid to work with a guy. And so I gave my guy small projects at the end. Truthfully, I'll say this too, because this was my own limiting belief. For whatever reason, it's not even a good one. I don't know, but I was so nervous about hiring out a handyman for the longest time. And so I was just, try to do a lot of stuff myself. I used to run to properties. I taught myself how to become a handyman for months. It was so dumb because I had to get my outcome, but I wasn't even as good at it. As soon as I found my guy, Eric, he has been so loyal to me now for 3.5 years, and he knows the Airbnb way. Hey, Mike, I'm going to head over there now. It's between 11 and 3. I know you have a turnover. I'm going to be there right now. I'll be out by 2:30. Great. Hey, Mike, I think you said Friday, don't you have a guest checking in? I don't think I can go get this thing done. It's a 4-hour project. I'll only have 2 hours. No problem. Let's reschedule for Saturday. He gets it. And having that kind of back and forth is such a relief. And having that kind of loyalty is such a relief because when I call him at 9 p.m. and I'm like, bro, emergency. This is a now thing. He's like, I got you. I'm leaving my wife, my kids. I'm sick. I'm going anyway. I've seen him do it all because he's got my back. And the way you get that is truthfully money. You give them small projects, you see if they can prove themselves, and you overpay them. If you're overpaying them a little bit on small projects, something that should have cost 50 or $100, and you're giving them $200, you think you're out of pocket 100 or $150, but that guy's got your back now. And then the next project, give an extra 50, an extra 100, extra 50, extra 100. Maybe you're $5,000 extra into this relationship, but when he's saved you thousands and thousands of dollars and bad reviews and all that across the time, and then he's discounting his rates for you anyway because you have such a good relationship, now he's not overcharging you, now you got a guy. So build those relationships. I think that's super critical. Starts with referrals and then goes with treating them well. And then the last one I'll comment on, and I'll make this quick, is just the designers. Don't hire family and friends just because they said they've designed a house once. I don't care that it came out good. I don't care that they think that they understand textures and colors and things. Your sister's cousin is not the answer. We have a specific ROI-driven strategy with every single amenity we put in. A sand volleyball court was very popular in Scottsdale for a short period of time until people realized there's zero ROI. Nobody actually uses it. So it looks good in pictures, but then people aren't playing sand volleyball because how many people do you need who's actually good at it, who's even athletic, who wants to put an effort on vacation? So sand volleyball is now just a waste of space in the backyard. A aesthetic designer might say, hey, that looks pretty. An ROI-driven amenity short-term rental expert designer would say, yeah, not that, not in this market. So having that expertise is super critical. I highly recommend Summer-led designs. They're my favorite designer. I've worked with them a number of times in different capacities. They are brilliant. They are comprehensive. They are ROI focused. And the entire team of very nice ladies is a pleasure to work with. I have some affiliate code somewhere. So if you're interested in design, let me know and I'll send you a code. But Summer-led is absolutely fantastic, world-class, and STR specific. The end.
Cool. I love that, man. That was great. Yeah.
That was a
So yeah,
ramble, but I hope it's helpful.
yeah, no, that was amazing. I really like the volleyball thing. Actually, I hadn't thought of that, which kind of makes sense. Yeah, you're not getting as much use.
Right.
Well, yeah, I think this has been awesome because we've got a lot of questions. I think we're kind of at the ending point here. I think we've covered most of the things here on our agenda. My only thing, I guess, would if you want to, if you have any parting thoughts with folks that are kind of thinking about their next investment. Um, I'll give my 2 cents just in terms of like, overall advice. If you're starting to look at a short-term rental, you obviously want to be patient because there is a lot of prep and there is a lot of research and there is a lot of, getting through each one of these things are important. But also you got to take action, right? And I think anybody, like we said before, anybody can be successful in it, but you can't be successful if you don't actually take the first step or if you don't dig in and, start doing research on this. And so, Savvy is a huge resource. We only get paid if there's a transaction. And so reach out to us, have that phone call with us. And at least hopefully we can be a spark to your short-term rental journey and, get you to the next step and get you some resources and help you along your way. So that would be my thing is just, take action, but be smart and patient about, the decision, but you got to take action in order to get the confidence to do it.
I agree with that big time. I also have one signing off thought that I'll mention, but we just got one more quick question in the chat that I'll just address quickly from Natalie regarding pickleball. Is pickleball court in AZ still a thing now? More than ever. It is just getting more and more popular as a sport, as an investment strategy, as a quick, cute little value add play if there's space in the yard. That is one of my go-tos now. I have a few top amenities. Some are like in my holster that I just know work really, really, really well. And some are more common and popular and well known. Pickleball is well known, but it is not stopping. So yeah, if you got room in your yard, put it in. If you're looking to buy a property, finding properties with yard space, that's my buy box, is give me yard space so I can put in the pickleball court and I can go improve the property and get the value add. forced depreciation as well as better cash flow. So big, big yes on pickleball in Arizona and probably everywhere. Everywhere I go, I feel like it's still a thing. Last comment though that I'll make as my sign off as well. There, and it goes right hand in hand with what Michael was saying with reaching out to Savvy and leveraging us as a resource. There is enough mentorship in this industry now that you have no reason not to know the right thing to do. And what's nice about that is you don't even have to be or become the expert. You just have to hang out with us. If you reach out to us and you're like, hey, I want to know about pickleball courts in Arizona, I want to know about Taiwanese semiconductor companies, like, I got you. That's what I know. Why would I know that? Because I'm so ingrained in this market. You couldn't ask most people about that. And you couldn't ask most traditional realtors about that because they don't know how that's going to affect your income. A traditional realtor, I'll politely say this. I think it's a real deficit to an investor when the realtor doesn't understand investment properties, because even if they're not maliciously commission sharks and they're not just in it for themselves, even if they care about you, them not knowing might put you in a bad position. And I get this phone call all the time. Hey, Mike, I just bought a property in Scottsdale. How much do you think it could make as a short-term rental? And it blows me away. You didn't think to ask me that question before you put a $200,000 down payment? That you didn't even think to ask? Like, why wouldn't you have called me? But now we're here and you already own the property, and no, I can't manage it or you'll never make money. That's happened a sad amount of times. So using the resources, using the mentorship that's available, whether it's YouTube, find a coach who is legit, whether it's a mastermind program, there's a couple of really, really good ones. And then a few that are not. You got to be mindful, be shrewd. But then you have us. Like Mike said, we're free. You just call us. Like, let me give you some guidance on where you want to be as it relates to my markets. If you want to be in a different market, I'll put you in touch with the right people. And so whether it's, selling or acquiring a new asset, we are specifically here to give you that education at Savvy. That's our whole purpose. Tyler Kuhn's dream is to make this make STR accessible to everybody and to grow this company and this team within the brokerage to be as big as it is, to serve as many short-term rental investors as possible, to put you guys in positions to succeed. We don't want you to just buy a house. We want you to get an investment property that gives you everything that you want, your cash returns, your personal use experience, everything that makes this whole real estate strategy fun for you, including building it out and making it a sexy property. That's what I love too. So thank you guys for your time today. I appreciate you sticking around. Looks like almost everybody stuck around the whole time. I love that. And I know we're going to blast this around to more investors and social media outlets as well. Please feel free to reach out. Right on our screen right now, you got QR codes if that's useful for you. Or just real quick, again, my email is mikestone@savvy.realty. And you can find me on IG at Mike Stone Group.
Cool. Thank you. Thanks, everybody. I appreciate it. This was great. Appreciate the questions and just hanging out with you guys. And yeah, hope to do it soon.
Wait, where can they find you besides this QR code?
So you can reach out to me, michael.klein@savvy.realty.
Beautiful. Beautiful.
Thanks.
Thank you, guys.
Thanks, everybody.